afternoon, I think. I'm still on my Eastern time zone, so I'm working an hour behind it, thanks. Or ahead, whatever it is. I'm time zone sensitive today. I hope y'all can read this. I wasn't able to get the maximize on this as a presentation, but this QR code that's up here is the PDF link to this presentation, so you're welcome to take it. Reach out afterwards and ask questions or what have you. My name is Doug Morton, and this is Bitcoin 101, a Bitcoiner's Guide to Personal Finance. And I'm with the Bitcoin Outreach and Education Group, and we are a nonprofit in South Carolina that teaches financial literacy and Bitcoin to high school students. So we are part of a thanks. Part of a pilot program where we were in a high school teaching financial literacy to a couple high schools, and then we've got 3 that are rolling out end of April, but may get pushed out to the fall. Depends on some time issues with the school system. But our goal is to teach financial literacy, basic financial literacy, debt, assets, inflation, and incorporate Bitcoin into the conversation. And so this presentation is a subset of the full course that we have, which is called Foundations of Financial Literacy. And it's a modular program that's based on what time needs are for a school district or where we're presenting, that if they need us only for a half hour, we can do a seminar similar to this. If we are granted 3 months of access, we'll build a 6-week course, 1 hour a week kind of thing. And my background with part of this is I've been in the Bitcoin space realistically since 2019. I was a shitcoiner in 2017, self-professed, recovering addict. And we'll talk a bit more about that for that history. My background is IT. I've been in IT for 30 years, and I own a software package called Alpaca, which is a point of sale and invoice management system that also accepts Bitcoin. So it's a real world product, and Bitcoin is fully functional in it with 12 to 15 different functions that show how fiat correlates with Bitcoin at the sales screen. So it teaches the cashiers how Bitcoin works. It teaches the customers how Bitcoin works. Sean's earlier talk had someone ask about the correlation of the dollar, or why Bitcoin has this price, why we talk about 83,000 a Bitcoin. And it's because we're all doing price discovery. We're all trying to figure out what its actual worth is. And that was a good conversation to have, and it needs to be brought up more. But as Bitcoin becomes more adopted, price discovery will go to the wayside a little bit, at least in theory in my head. So let's get started. All right, so why Bitcoin 101? Bitcoin is used globally around the world. Well, that is around the world, and it's often misunderstood. The FUD that's out there, the fear, uncertainty, and doubt, we've been battling it for years. Governments have tried to bring down Bitcoin. They've used choke point 2.0, keywords like that. And so we wanted to simplify Bitcoin's complexity through education and outreach to make it easier to use and understand. And so the legal review that everybody's going to say, this is an overview of Bitcoin. It's not financial advice. Do your own research and don't trust, verify. So everything I say, take it with a grain of salt until you figure it out and do your own research. All right, a couple notes. So this course, Bitcoin 101, we're doing this all day at BitBlockBoom. Every speaker, we weren't given guidelines, but I figured you're going to learn the true technicals of Bitcoin somewhere else. So this is going to be an overview of basic Bitcoin technology. And then the goal here is to show how Bitcoin can be utilized in the fiat world as well, both as fiat to Bitcoin and Bitcoin to fiat, to maximize your leverage and usage of Bitcoin over time. And it's not truly, at least this class, is not truly about number go up as an investment asset, but more about the financial tools that Bitcoin provides and the companies that are providing that functionality now as a new asset class. Keep in mind, Bitcoin's been around 15, 16 years, and it's brand new still. New companies are coming online, bringing up new stuff that improves the user experience all the time. So if you think it's broken or not a fun thing to do, tools are coming out that make it a lot easier. So I mentioned I wasn't really going to focus this on the investment asset, but I did want to bring this up. Sean mentioned it before as far as being a $1 trillion market cap. It was the quickest in history, but technically it actually reached the $2 trillion market cap in 15 years. This is the fastest in history of any asset or business. I believe Google took 24 years to hit 2 trillion. And Bitcoin exchange traded funds, whatever you think about them as a Bitcoiner, they were the best performing ETFs in history, taking over from gold. So there's a QR code that's here that I'm not going to speak of, but it's a really good document. It's a 150-page write-up of Bitcoin in the world by Epoch and Eric Yates, and that they're a venture capital fund, and he's a Bitcoin writer. So I'd highly recommend reading that PDF. All right. So why Bitcoin? Why did Bitcoin get created? So originally in 2009, when the white paper was put out, the main note was that, most people think that this was talking about Bitcoin or banks being bailed out. Bitcoin was basically a protest to that. So just simple. The technology had been built up over decades that built into Bitcoin. And then when it was published, this was the first note out there. Quick question. So older Bitcoins or Bitcoiners don't need to answer if they don't want docs, but who's been in Bitcoin less than a year? All right, cool. That was just for my knowledge, so I can determine exactly what I was going to talk about specifically for new people in the space. So Bitcoin is a decentralized peer-to-peer monetary system. It's run on thousands of computers around the world. It's rules-based and consensus-driven. And so the bottom line on this is that you are your own bank. You can validate your funds. You can transmit your funds, and it's all up to you, peer-to-peer, no third party above you, judging you or telling you what you can do, sending your own money. It's published in 2009, currently at the $83,000 mark. We're at about 1.7 trillion market cap. And just fun fact, the first viable transaction was 2 pizzas for 10,000 Bitcoin. It's Pizza Day, and it's now worth $823 million for those 2 pizzas. All right. So why does Bitcoin matter? It allows you to verify your own money in your own system, basically. No trust is needed. No banks are involved. It allows you to build wealth without counterparty risk. So somebody else is not holding your wealth if you've got it on your own hardware wallet. And so there's no risk that somebody is going to take it, defraud you, and take away your Bitcoin. You can bank the unbanked without permission. So in the United States, unbanked people, depending on the state, is anywhere from 5% to 25% of a population. South Carolina, where I'm from, they say it's 25%. So, I mean, you go out to the rural areas, there are people that cannot get a bank account. They live paycheck to paycheck, cashing their checks at a liquor store, and they're not a part of the system. Kind of crazy. Well, Bitcoin allows you to be unbanked, and it's used outside the United States much more than we do here, mainly because we were built to use credit cards. Our system is debt-based, and so we're trained to use credit cards. We're incentivized to use it. I'm actually going to talk about that in a little bit, so I'll skip that. It enables quick final settlement. So Bitcoin, technically it can be quick, it can be a little slow, depending on what layer you're using, but it's final settlement generally within 20, 30 minutes. Credit cards might have 90 days final settlement. It promotes human rights because it's your money. It allows you to buy food without somebody censoring you, without somebody stealing, confiscating your money. And this stuff happens. You may not see it in the US. It happens a lot of other places around the world. So promoting human rights. Key facts about Bitcoin. The limited supply of 21 million. That's rule-based. It's created through mining. It's not printed. So the banks aren't out there saying we're going to create more Bitcoin. If they do, it's probably paper Bitcoin. So keep that in mind. It's divisible. So 1 Bitcoin equals 100 million Satoshis, which think of pennies to a dollar, sats to a Bitcoin on a bigger level. And fractional ownership is possible. We get asked this all the time. When we do intro discussions with folks at farmers markets, they're like, well, it's $83,000. I don't have $83,000. And they don't get that they can get $1 worth for 1,000 sats. And so that comes part of the education that we're doing with the outreach group to teach that kind of thing. So 19 million of the 21 million have been mined already, with scarcity being built into the system. And those rewards are halved every 4 years. So it's going to take 120 years for the next 2 million to be mined. And then this link here is a Bitcoin conversion tool. This is part of the some of the software that we give out in the outreach group, that you can do your conversion easily to see the dollar to the sats to the decimal of Bitcoin. So Bitcoin's price is volatile. We see it go up and down all the time. And it's, just recently it's had its 20% drop. The interesting thing about it, the stock market in the last 2 days has dumped. Bitcoin stayed at 83,000. But the volatility indicates high interest in the system. So the bears and the bulls are fighting each other. And that's the trading activity that deals with the volatility. But more adoption will lead to less price fluctuation over time. That's the game theory of it. And then somebody had asked earlier, well, why is Bitcoin worth, say, half a house or whatever they're validating it against? And it comes down to price discovery. And I mentioned it earlier. Bitcoin being a new thing, we really don't know its price, or its, we theorize what its potential could be. But this $83,000, most Bitcoiners are like going, oh, it should be a lot better than this. But with all the weird black swan events from a few years ago, when the price dumped at 69,000 down to 15, that price discovery was part of that discussion. So we're going to see a lot of movement over the next year or two, whether it's up or down. So be prepared. All right, is Bitcoin money? I believe it is. These are the 6 main functions of money: fungibility, scarcity, portability, durability. But that Eric Yates guy who did that I had the QR code, wrote this book called The Seventh Property. And he also believes that immutability is a main function of money. So it cannot be changed. And so when a Bitcoin transaction is put on the blockchain, it's in stone after a couple confirmations. Depends on what value you put against the permanentability of the blockchain for the first couple transactions, whether it's immutable or not. So most people, if you go to a coffee shop and you buy something with Bitcoin, getting one confirmation may take 10 minutes, but you're pretty sure that they're not going to, destroy that block and get defrauded of their Bitcoin. That if you get 6 confirmations, that that's hardened. There's been a lot of resource put into it, and you could be well off saying, I'm going to pay $50,000 for a car in Bitcoin and wait 6 confirmations, and you'll be good to go. It's in stone. So Bitcoin's blockchain is built on a ledger of account. That is the ledger account. All new transactions are confirmed on average every 10 minutes. You'll see a lot of variability in that. Sometimes it'll be 3 minutes. Sometimes it may be 40 minutes. On average, over time, it's built to be every 10 minutes. All the transactions are validated by node computers. So I don't know anybody who runs a node. All right, good quarter of y'all. Anybody can run a node. Start9 is selling nodes out in the lobby. And that's a good part of being into the Bitcoin system, because you run a node, you can be your own bank from your node, you can validate transactions. So nodes are an essential part of the Bitcoin network. Bitcoin every 10 minutes, you get 3.125 Bitcoin created. That's the only way new Bitcoin is created. And right now its value is about $249,000. And that's part of the proof of work concept. This is the mempool, and this shows pending transactions over to confirmed transactions. And you can click on each block and see the transactions on an individual basis. Bitcoin security is protected by public and private keys using the SHA-256 encryption. Your public key is the address that you give to other people to pay you. The private key is for you to sign your transactions so you can send the money out securely. Just a quick note on SHA-256 encryption. The security is based on the law of large numbers, which means that the SHA-256 encryption creates more addresses than atoms in the known universe. So it's kind of mind-boggling. So when you think about it, you got this 12 to 24 word seed phrase, and you would think, okay, maybe we can hack that because I'm just guessing 12 words. Well, more addresses than atoms in the universe. Just crazy. So anyway, Bitcoin wallets. They allow you to interact with Bitcoin. You can spend, receive, store it, verify your transactions. And like I said, I'm not going deep into all this, but you got your on-chain and off-chain transactions. On-chain would be the 10-minute thing. Off-chain is usually using Lightning or Liquid, and those are the instant transactions for smaller price points. But your wallet is basically a signing device. I do have a Moon primer here. This is what we use at our outreach booths, mainly because Moon is super easy to use. So if you download Moon Wallet, it's ready to go. You don't have to verify email addresses or anything. So that's why we use it. Bitcoiners will argue with us from time to time that there's other better wallets, and there are. But for ease of use, for a no-coiner, somebody who's brand new to the space, super easy to use. We used to use Wallet of Satoshi until Choke Point 2.0 because it was also easy to use, but it was a custodial wallet, and so we had our haters on that too. But it was a good wallet. All right, mention stablecoins briefly because that is part of the conversation because people want their, quote, stable dollar and know that Bitcoin is volatile. So stablecoins play a role in that conversation because there's wallets coming on that'll allow you to keep your Bitcoin in the, as Bitcoin or convert it as a stablecoin so you can spend it as a dollar. And stablecoins are built as a one-to-one asset to the dollar by holding U.S. treasuries generally. So like Tether, they've got 89 billion in U.S. treasuries to keep it pegged to the dollar. And so keep in mind, Bitcoin is not a stable coin. And then one of the wallets that's in use for showing this is the Aqua wallet. Keep in mind, Aqua is a great wallet, but it does these submarine swaps. And so it takes a little longer to send transactions. So if you're wanting the instant feedback of a payment, got to be patient with it. But they're making changes all the time, make it quicker. All right, we'll start getting into the finance part of this. So Bitcoin out in the real world is maturing rapidly. So we've got all of these different things that are going on, debit cards, credit cards that are backed by Bitcoin, Roth and traditional IRAs, these exchange-traded funds, the sovereign wealth funds, the Bitcoin strategic reserves, Bitcoin-backed mortgages are coming online. And mainstream inclusion is about education too. So we're getting asked on a regular basis to teach Bitcoin in our schools, and we're seeing the growth around the U.S. And then inheritance planning plays a role in this too, and we're going to talk briefly about that as we go on. All right, how do you get your Bitcoin? 3 ways: you mine it, you buy it, earn it. So you do a capital investment to mine it. You can buy it from somebody who's selling it, and you can earn it by working for it. So in mining is capital intensive. You can do it on the cheap if you do like a BitX miner, but if you're doing industrial miners, you're going to be spending thousands and thousands of dollars, both on the hardware, the site, and power. And but as a person, just as an individual, you can buy a few basic units, send them to a third party, they'll host it for you. You'll get the Bitcoin share out of the pool that you're with. And, it's mining, as several other people are talking about mining and the expenses that go along with it. But keep in mind that it is so expensive that the industry says mining is pain because they are having to leverage the amount of money that it costs to run the thing, the downtime, the expense of the electricity. So it's a painful thing, but it's fun. This is a lottery miner. This is a BitAxe, and I think that's the Gamma. But they run from $150 to $250. They call them a lottery miner because they just sit on your desk, cost $150. So if you have 150 lottery tickets, that's a one-time buy at the store, where you can keep this and run it on your desk, and hopefully win a Bitcoin block reward, which has happened, I think, 6 times this year for a BitAxe. So if you want a lottery, go for it with this. They're inexpensive. They're fun to play with. So if you're a tech nerd like me, you probably have one or two. So buying Bitcoin. So these QR codes are off a postcard that we give out at our events, and they go to river.com, Strike app. We don't really promote the Cash App, but it is a way to buy Bitcoin, and you can actually withdraw it off of the Cash App. And a lot of people use the Cash App, so they already have access to buying Bitcoin through that. And so that's why I mentioned it. And then just for transparency, we get like $5 if you use that QR code. So it's kind of like a win-win if you deposit on those systems. All right. So like I mentioned, Cash App's not a true Bitcoin wallet, so I don't recommend you keeping it on there. Same for PayPal for buying their Bitcoin. Move it to your own hardware wallet. The paper alternatives of Bitcoin, ETFs are a paper alternative. They're supposed to be holding Bitcoin. I don't know about the audits. I haven't really dug into that. But I know people like their ETF ability for it to grow over time. But it is an alternative to hold Bitcoin. So is stock, like MicroStrategy, Strategy, Mara. There's a few others out there that are Bitcoin stock companies. I know of a medical device company that's doing it. And GameStop, I guess that's going to be the next new kid on the block for a stock company holding Bitcoin. So, but keep in mind, not your keys, not your coins. So if you're buying Bitcoin and you expect that to be real Bitcoin, it's not. It's an investment in an alternative asset that's buying Bitcoin on their behalf. So keep that in mind. And then other options of buying it or holding it, IRAs and through inheritance and retirement. All right, so you don't have to buy Bitcoin to hold Bitcoin. So in our outreach education group, we do not generally talk about investing in Bitcoin. We are talking about saving by earning it and by spending dollars to earn it through various apps that are out there. One of them is the Fold app. So that's a debit card with Bitcoin rewards. They do a paycheck conversion to Bitcoin. So you can actually have your paycheck, your entire paycheck, put into the balance on Bitcoin, and then use that debit card to buy your purchases. It does the conversion. Gift cards are a good way of earning Bitcoin. You get 2 or 3 points back on your purchase, and you can just save that Bitcoin. All right. So you have Bitcoin. Now what are you going to do with it? Are you just holding it for the long term? Most people do. OG Bitcoiners, they're basically against spending it. My wife has had arguments with a bunch of OG Bitcoiners about spending it. And it comes down to, we're developers out there, including myself, we're building stuff for the retail space. If you guys aren't spending Bitcoin, then you're not supporting the developers that are building for Bitcoin. That's basically how it works. So if you spend your Bitcoin, buy your Bitcoin back, support the system. Pretty easy. The other things to do, you can use it, you can borrow against it, you can avoid capital gains. Capital gains is a discussion that I hear so many lies about or untruths about. There are so many different ways to get around the capital gains discussion. There are tools that you can use. Strike app, for one. You can spend your money using their Bitcoin, and there's no capital gains on the discussion. All right. The loan companies out there, one second. There are a lot of loan companies coming online now. There were a bunch before FTX and Terra Luna and some others, but they were providing loans that were being rehypothecated with your Bitcoin, and then they were defrauding everybody by leveraging your Bitcoin to gamble on other stuff. So the fraud that is out there in Bitcoin is usually because of that, not because Bitcoin gets hacked. And so that's an interesting part of the discussion. But with these loans that are out there, you can borrow against the asset, and instead of selling it, and getting the capital gains on your sale, you would borrow against it, pay it back, rinse and repeat, basically. And so if you're needing to buy a tractor for your business, you can build $250,000 in savings for your Bitcoin that's on the books for your business, borrow $125,000 against it, buy that tractor, pay that off. And you don't have to go through the banking, personal finance pictures, the credit ratings, all the stuff that they do to do the research to back that loan. You may pay a higher interest rate, generally. Depends on your credit rating, I guess, in the real world. You could be paying 30% on a credit card, but on a Bitcoin loan, I've been seeing them anywhere from 8 to 10, 12%. And it's usually because of liquidity. So it's a new product, and as more the money comes in on the back end, the institutional money, you're going to see interest rates go down. And the reason it's going to be going down is because, be in the next slide, it's basically because these there's no losses for these banks. They're holding your Bitcoin. They have 100% guarantee that asset's going to pay off that loan. And we'll talk about that in a minute. So infinite banking is the concept that I just talked about. Borrowing against the asset, the value goes up in value. You can borrow against it if you need to. And then you're receiving your own money, so there's no capital gains on that discussion. This concept comes from whole life bank insurance, and it's basically the same exact thing, except for the payoff if you die, part of insurance. But the tool still works. Bitcoin loan companies, these all offer a different product right now. So Unchained does it, Ledden does it, Coinbase does it, but each one of them does it in a different way. And so Unchained, you have a non-rehypothecated loan. So they give you a fixed interest rate, they lend you the money, and then they do not lend that Bitcoin out to somebody else. Ledden, they can offer both versions, and then they have fixed interest rates depending on which one you select. Coinbase, on the other hand, is complicated. So they can rehypothecate your Bitcoin. They have variable interest rates. And everything I've read, everything you do with them is a taxable event because they're taking your Bitcoin, converting it to wrapped Bitcoin. So that's a capital gains discussion. There's institutional money floating into the loan company pool. So NYDIG and Cantor Fitzgerald are apparently bringing in about $2 billion worth of money to loan out to people. Exactly. All right, IRAs. Traditional IRAs are available, Roth IRAs, rollover IRAs. You can get these through Swan, Unchained, River. I'm sure there's a bunch of others. Those are the ones I'm aware of. You can do qualified and unqualified funding into them. And it's tax advantage savings for retirement. So that is a newer functionality of Bitcoin. I mean, the last several years, it's a completely stable part of Bitcoin. Yep.
But so I said, on a good thing. Later, it's on well, and it's on Eric, they did say.
Well, like Sean had mentioned, it's not legal. So, if they, if the law gets changed, great. They say the things that that they want to do. They did some of the things that they told us they were going to do so far. So we'll see what happens. But we're dealing with Congress too, and so you've got the policy part of all that. So I would. Kind of like the same discussion as capital gains going away someday on Bitcoin. That's an active discussion going on in DC as well as in the states, in the legislatures, but nothing's happened yet. So I think it's a long battle. Mm-hmm. Yeah, it's an amazing potential. So I'm all for it. So inheritance planning. Let me make sure I did that. Okay. So in inheritance planning, all these companies that are offering some type of inheritance planning, the first thing they're going to tell you, consult an attorney, make it legal. You can't just give somebody your hardware wallet when you die. You give it to an executor and say, okay, give this $100,000 to my kids. The reason is you've got gift or inheritance to decide how you're going to be taxed on that gift, basically. So if you've got $100,000 that is truly an inheritance, but you gift it to your kids and they get audited, IRS is going to say, you received this when it was $2,500 of Bitcoin. It's now worth $100,000. If that's a gift, you're getting taxed for that entire $97,500, not as part of the inheritance. So do it legal, do it up front. Don't hide your Bitcoin in that regard until laws change. So just keep that in mind. I've heard a couple podcasts with some of the, I think on Marty Bent's pod, he had somebody out there talking about it. And the IRS has teeth. They will come after it. So just keep that in mind. All right. So the Bitcoin companies that are doing inheritance planning are varied. Unchained out in the lobby, they've got their products. And they will tell you that this, what they're providing is not legal advice. It's informational only. So the don't trust, verify thing. But the key thing that I've been seeing in these products is that they're providing a protocol to transfer, not the legal transfer. So there's a difference there. BitKey is a newer wallet that's out there. They've got an inheritance protocol, and you sign up somebody to be your beneficiary. And then when you pass away, the beneficiary has their BitKey that they say, okay, my dad passed away, start the time clock, and that's 6 months. So there's a 6-month window after the passing of someone that the time clock goes on and locks the Bitcoin, just in case it's a fraudulent claim. And but keep in mind, it's just the protocol to transfer it, not the legal transfer as an inheritance. So don't trust, verify. It's a cool thing. I'm glad it's out there, but it's not truly an inheritance. It's a gift, at least in my mind. So let's see. All right. So I'm a little early on this, but this is the end. This is the resources that we do with our outreach group. The big QR code goes to our website. This is the PDF again of this information. And I'm open to questions if anybody has them. Thanks, y'all. Yes, ma'am. So the being 16-year-old is tough in terms of getting into the money system. The banking system is against you unless you have a parent that says, okay, we'll get you involved. My kids, I've got 2 adult kids and a 13-year-old daughter. My older ones can get bank accounts, get a strike account, and then, sweep funds back and forth. For my 13-year-old, we're doing the exchange for her and putting it into her account. So she gets $50 for a birthday gift. We're doing that. It's unfortunate because using Bitcoin as a wallet, there's no permission. You can do what you want. A 1-year-old can have a Bitcoin wallet, but the banking system is what it is, and so you got to play by the rules to get in there. Not a good answer. Hey. Mistakes about that. Well, we'll step back. The biggest problem that we have is that they have zero financial literacy. They're told here, parents will give a debit card or credit card and go spend it. And just like our debt society, we just, we're consumers and we buy. And there's not a lot of discipline in that regard. I was not taught financial literacy as a 30 years ago as a 20-year-old. Prior to that, my parents, they were boomers, and it wasn't part of their discussion either. So I've learned most of my financial literacy in the last 8 years, other than the School of Hard Knocks over the last 30 as an adult. And but going into the classroom, we're dealing with FUD. The teachers don't know what Bitcoin is. The principals don't know what Bitcoin is. The administrators don't know what Bitcoin is. And in South Carolina, they just passed a law, which was good intention, to take all cell phones out of the schools starting January 1st. So we can't do a one-on-one lightning payment thing. That's an interactive part of being in Bitcoin. They won't open up the firewall for us to go to CoinOS to open up a Bitcoin wallet, which is the super easiest way to create one on a computer. They all have computers. We can't get through their firewalls. It's the craziest thing. So we're dealing with that on an ongoing basis. And that we actually had to redesign the whole curriculum to make it paper-based, which is kind of unfortunate when you're talking about Bitcoin. So we try to work around that. The kids, though, the ones that are actually getting something out of it, we will have some that'll fall asleep that are sitting in the back of the room. But the ones that are actually learning about financial literacy, at some point, something clicks with what we're talking about, and they're like going, this can help me in my future. That does happen. I wouldn't say it's like you don't get the light bulb all the time, but eventually it kicks in. Like these guys. So these are podcasters from California and Oregon, and y'all need to talk to them about the youth learning Bitcoin and finances. Pretty good. Any others?